Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 29th of April, 2024, 5:35 p.m. Central Time. You know, I was hoping today by this hour we'd have heard a Hamas response to what our Secretary of State, Antony Blinken, said it was a very generous offer, and backed up by that, by David Cameron out of the UK, that Israel had made to find a way to get a peace process going. You know, you're coming to the end of that. Eventually, Israel's going to say, we tried everything. We can't make a peace deal. We're going into Rafah. And my guess is if Hamas doesn't take this deal, you're about there. So be ready for that. I think you're reaching a break-it moment. I hate to say that. You know, I always hope that things will end, but don't know that this can. Because at the end of the day, Hamas realizes that in the end, Israel's going to push them to either get out of Palestine or they're going to destroy them. That's the goal of Israel in the end. They can leave peacefully. Will they? 3,500 people want to rule 1.5 million to 2 million people that are in Palestine. And it's hard to believe that, but that seems to be just how this is working. Maybe that's what the Palestinians want. I'm not there. I don't know. And it's very different because you have to understand, we get in America watered down information, but I read papers all over the world in the morning, and you get different opinions, but most of them are Western papers. I did read this morning Al Jaraz, and their opinion of it, not that much different in all fairness, so I did read that. Okay, so as we take a look at the stock market, you're trying to make something out of nothing right now because Wednesday's the FOMC announcement and the press conference, ADP, Challenger Gray, unemployment claims on Thursday, Friday's the U.S. jobs report. Now, we also have another piece of data about to hit you, and that's tomorrow. We get the first quarter unemployment cost index. We get Redbook Group sales. We get the Case-Shiller 20 metro home prices, the Chicago April PMI, the Conference Board's U.S. consumer confidence. Secretary Yellen goes on to Congress and talks about the fiscal year 25 budget. And she announced today the refunding for the quarter, and the market didn't even react to it. The number wasn't a big number enough to move the market one way or the other, but it was an increase. They said that they didn't get enough money. I discussed that in my full research report tonight, and I'll let it go at that. You get a touch of what I do here, not everything. So as we look at all this, the reason that you've been down in the energies and sinking slightly and in the metals is if you can strike a peace deal, you take out some of the war premium in these markets. And obviously, it would last probably 6 weeks or so. That seems to be what's on the table. It's not going to be for 40 hostages, but all that's irrelevant. It's relevant to the people that are going to be released. Let me put it that way. It's irrelevant to the whole process where what you're trying to get to is a ceasefire in the end and get a peaceful resolution as to what's left. So we will see where this all goes. You know, when I look at it and the demands are to let the people go back into Gaza, I have to ask a question. If I'm seeing the pictures that you're seeing right, what's left to go home to? I mean, everything looks to me like out of a Terminator movie, as though it's been just destroyed. So I don't know what's left, but again, I'm not on the ground. On the S&P, on a weekly chart, as you know, you fell back, you hit the 18-week average for support, and you've done what I thought. You've got your support. You don't want to see this market, I can tell you, close underneath the lows of this week, April 19th. If the market does that, I think you have to get nervous because you could get more of a correction in the market. That would be the first close under this, and so all the way back here in the September timeframe. So that's my warning number in my head. When I look at this market, all I see is a break, a small bounce, and that's it. The traders that are saying this break wasn't enough to really get a bull market going, that's the reason they're saying that. You normally get more of a break than this. This was a pullback in the market, not a correction. Pullbacks can be 3 to 5%. Breaks are generally 10%. You didn't get that. in the market. Overall, you can see what the market's done. You've come up. You're not trending. You have a higher high and a lower low pattern. When you look at what we've gone to, you're basically at the 18-day average, and you hear me say all the time, markets that give you a bounce from important areas like to go back to that number to try to figure out what to do next. Well, my guess is it's going to hang there, waiting for the FOMC and the press conference. I don't expect anything different than the Fed chair has said. He cannot say that the Fed has gained confidence that the numbers are moving in the right direction when we just saw last week gauges move higher, not lower. He can say maybe they think they're onto it, but how can they be confident? If they're confident, cut the rate. I don't think he's going to say that. When we look at where the market was, it ran the Bollinger Band to the 100-day average, gave you a bounce, and then momentum turned back up, and you can see that with that turn, this is where you've gone. So I think you're in the middle of no man's land. I think the same thing is true of the NASDAQ. You have a higher high, lower low, and you came back up. I thought you'd run into resistance first at the 100-day average. Last week, that's what I was saying, up to the 18-day average. I haven't changed my opinion just yet. In the micro mini Dow, same thing. You had your bounce, you've gone to the 100-day and the 18-day average, and you've stalled out. So there is a very common theme here. And to wrap it all up, you've done the same so far in the Russell. None of them are showing trends up or down. This was the bounce that they got. Now they're marking time, as I like to call it. In the 10-year note, you lost the bearish reading. So to me, what did the market scream at you? I can come back with you right here. This was the close of business on Friday. Monday. We're Tuesday, excuse me. Here's Friday, just so that we see it. It was embedded. Today, which is April 29th, you have a 22 reading. The way I teach slow stochastics on my formula, out you go. You're looking for the potential. It might go to the 18-day average. Why hang around now in front of the Fed meeting? It doesn't make sense. And in the 5-year, I had the same exact thing. Time to call it a day in this and just say, maybe I stay in cash for a couple of days and see what the next parade trade's going to be. Now, you're still more bearish in the 5-year. It hasn't gotten over prior highs, but losing these readings to me, it's enough that you go back to the drawing table and you wait. In the dollar index, I was expecting once you lost the bullish embedded reading right here, and it started coming down, that you'd make a run for the 18-day average. I'm satisfied that Friday made the run. Whether it hits it or not, I'd love to see it hit it. I always love when it just does that. I think you're in a holding zone and you're waiting to see what's going to happen. And the flip-flop of that is the euro got to the 18-day average. So is this where they're stretched out and they come back this way, or do they keep moving where the euro gains on the dollar? A lot this week will determine that. In the British pound, you've gone straight up from when you lost basically the Bollinger Band right here. And it was screaming, come out. You're probably going to the 18-day average, which you did. And now you're just testing other averages in the market at this point. Got to wait, see what it's going to tell you. This is not a trend trade as I see it. Bitcoin's doing pretty much what I had hoped it would. And this is just the first move. I thought you'd rally a bit into the halving, which we did. But as you heard me say, it takes about 4 months to 6 months. Then you really see the impact of the halving because you've got a lot of coins registered now. And then you start running out of them. And it takes twice as long to mine a coin now than it did just 2 weeks ago. In Brent versus WTI, the Brent is still gaining. So the market came down, and it's been holding beautifully the 18-day average of closes. When you look at the energies, all they did is rally back to the 18-day average and sort of stall out here. The same can be said of WTI, and I'm sure you see that. They bounced away from the Bollinger Bands back up there. They never did embed. You've got downside bias still in them. The gasoline is the one that's still trying to hang in there, but it wasn't a pretty close today. I don't think it was. The market was up most of the day, and by day's end, it closed down 131 points. And I was watching it early on going, Now, this is the support zone in the market, the 18-day average. The trend is up, but you have to risk too many points, almost 5 cents in the market, if you're going to put a stop under the recent low, and I think that's too much to risk. And in the nat gas, you got a heck of a bounce off the Bollinger Band again. You are caught in this sideways action from top to bottom. Recognize what you've got. I don't know yet if it's a base or a top that it's forming, and it comes down one more time, and it easily could. I mean, we are producing more and more oil on a regular basis, and to do that, you get gas emissions, natural gas. You take that, you liquefy, you keep getting this natural gas. So keep understanding, as we keep producing, that's what we're getting in America, and we're a huge exporter of it. Problem is, one of our ports is only operating at about 75% what it should be. They'd never run, from what I've read, at 100%, but they can run in the mid to high 80s. So that's backing up some things, and that's got to be done. And on energy, remember, this is the week that the Trans Mountain's supposed to open up in Canada, where they're going to be able to start sending to the Pacific upwards of 500,000 barrels a day. So this starts to get serious numbers that are going to be able to flow for Canada. We'll see what happens. Want to remind you that each morning, I start you off now at 6 in the morning with my futures video, and then at 9 with the ETF. And the beauty is they complement each other in so many different ways. Number one, when I'm starting off the futures, here's the reports like I just went with you coming out. Then on the ETF, here's how the reports came out. That's number one for that. Number two, sometimes you get a bull signal in the futures. You want to jump in, but you can't because the dollar risks are too big, which is the nature of futures. Whereas on the Spiders ETFs, that's not the case. And I've seen this over and over, and that's why I think the combo is the way to go, because you can trade out of both hands, left and right, Spider ETF stocks and futures on the other, and I give you the full package. Each video covers basically these type of ideas in futures along with individual stocks, and I'm always rotating those, as you know. In fact, tonight we rotate again in the stock ETF, as you'll see. And so it's pretty interesting. And that eBay call that we were talking about worked out pretty good, actually. Today would have been the day it hit the upper Bollinger Band after we started talking about it. IraEpstein.com. Go to the word research or move your cursor to the top here. You'll see an icon. Give it a click and away you go. I'm Ira. You have yourself a great evening. I'll talk to you all in the morning. Take care.